Hello, trade pros. Good morning, and welcome to the morning market update today for December the 3rd of 2025. I hope you're having a great start to your day. It's a great morning and a great session so far. And yeah, let's kick into it. Let me just make sure everything is good. Everything is good. Fix the camera just a little tad bit here. Let's get into the update. We're gonna do some of the news overnight, some of the breaking things going on. As well as the trading strategy. And then we're going to turn around, obviously, and look at the levels and set the plan for the remainder of this session. So let's dive into it with the news. Overall, futures are up modestly, about 0.3%, which is a good start to the day here. The U.S. dollar is a little bit weaker, down 0.3% on some dovish Fed expectations. We're going to talk about that here briefly. And in a moment, the U.S. 10-year yield is pretty stable. Crypto front, Bitcoin and Ethereum are up quite a bit. Bitcoin's up 7%, Ethereum up 10% after being laggards the whole time. There's a ratio of Bitcoin to gold, and it usually ranges between 20 to 40. And at the moment, it's towards the bottom end, around the 20 threshold, which could suggest a Bitcoin bounce on gold weakness and a reversion of that trade that's been so hot for gold in gold's favor and so bad for crypto the last little bit. So something to keep an eye out on. Plot that, look at Bitcoin/gold on any platform, including TradingView, and have a look at what's going on. It's pretty interesting stuff. In the copper or the commodities front, copper is up again, new all-time high, another 2%. I talked about it yesterday in the update. All right, oil rebounds, gold slightly lower, which brings us to the big important release today that happened at 8:15 in the morning, the ADP employment number for November. All right. This is an early labor signal, not like we're going in labor, but it's an early labor market signal for the all-important non-farm payrolls that we haven't gotten in some time because of the government shutdown. All right, so we got the updated look at it with ADP. It's kind of like a little peek inside of the jobs number. That's what ADP allows you to do, and it came out this morning. All right, and it came out really bad. It was a stinker, like, whew. Like very, very stinky, very bad report. ADP jobs fell 32,000 jobs, minus 32,000 versus 10,000 plus expected. So net total of 42,000 deviation from expectation. All right, sharp miss and a major, major slowdown from last month's 47,000 jobs that were added to the economy and a negative number. That's kind of the shocker there. All right, the decline in November was a broad-based decline. But most of the weakness came from small businesses, which is particularly worrisome because small business is the economic engine of the U.S. and almost just about any other economy too. Why is the camera moving? Why is it moving? Stop moving. All right. That's where we're at. The official BLS jobs report, which is the Bureau of Labor Statistics, which is the non-farm payrolls report, will be out on December 16th. Which is 6 days after December 10th, which is when the Fed meets. All right, so the Fed meeting is next week, and the expectation is for rates to be cut. All right, the market implied probability of a rate cut in December has gone back up to 86% from 84%. This is for a 25 basis point cut. So the Fed is once again expected to cut the interest rates by 25 basis points. Just so you know, when it's over 70% market probability, the Fed usually does it. All right, when it's over 70% market implied probability, it would be a shock if the Fed didn't do it because the market's kind of already priced it in, and they're under a lot of pressure to get it done. It is possible that they don't cut, but there would have to be something big that would happen between now and next week, Wednesday, and also the market odds would have to change significantly, and they're not going to because things are actually moving in favor of rate cuts, including the stinker of a jobs report. Minus 32,000 jobs is horrible. Right, it's a loss of jobs on a net total in the month. All right, also in a month when you're supposed to have small businesses hiring more people. All right, towards the end of the year, and also when there's retail sales driving a lot of employment, seasonal employment, but it's employment nonetheless. Despite all that, we're down 32,000 jobs. Stinker, terrible, really bad. All right, which brings us to something that's actually really good. Donald Trump is appearing to favor Kevin Hassett for Fed chair. And the reason that's important is because Kevin Hassett he's the director of the NEC at the moment, but should he be promoted on May 26th, which is when May 2026 when Jerome Powell steps down, right? It's going to be very positive for the markets who love rate cuts and dovish outlooks. And dovish is lower rates, more stimulus, more free money, more oil to grease the wheels of the market. All right. Donald Trump said that he's going to announce who he's going to pick in January, the early start of next year. All right. But there's reports that came out that say he didn't even interview any other candidates. Says that the interviews were canceled for all the other candidates, which obviously boosts the odds that Kevin Hassett is the one that he selected. All right. Look, I don't know why. Maybe he's such a good candidate. Maybe he didn't want to do the job interviews. I don't really know why, but that's what reports are saying. I don't even know if this is accurate. Maybe this is all inaccurate, but there's reports surfacing saying all the interviews with the other 9 candidates that were front runners were canceled, and Hassett was selected as the guy. All right. The markets would love that because it's a dovish thing. Okay, that's a softer USD, US dollar. That's, it's a risk-on type of play. He's very positive for the market, and the market would appreciate having him as the next Fed chair. Although he still won't have any policy decision until May 2026. The market's getting giddy now. All right, the takeaway is this. All eyes are now on ISM services. Top of the hour, 10 a.m. We have that report. 9:45, we have another one as well, normal impact. But the high impact is the non-manufacturing ISM data that's going to come out at 10 a.m. All right. That's all that matters today at this moment. Dovish Fed expectations are kind of supporting risk assets, supporting risk on. So we are seeing a boost in assets across the board. All right. Crypto and copper strength is good as well. And, we're seeing a lot of positivity here supporting the run. And the lows are holding out on rotations. And I think we're geared towards making a run towards not 6,900 on the ES. Be very careful. Don't target big, giant, juicy numbers like that. Around 68.95 is probably where we're hopefully going to. It's 30 points higher. Let's see what happens. Hope, by the way, when somebody crosses their fingers and hopes for something on YouTube, you should be like, oh boy, we're in trouble. Let's get rid of hope. Let's turn around and build some edge on the charts. All right, guys, let's do this. Never thought I would be crossing my fingers and hoping on YouTube, but hey. Am I seeing the market tank? As I'm talking, yeah. Rose, I just turned around. Let's see what's going on. There's a reason for it. Multiple divisions have reduced how much salespeople need to grow. The latest was AI software sales quota for Microsoft. It's down, but it shouldn't really be the contributor. U.S. malls allowing Madero to relocate to Qatar. That wouldn't have done it. That's a pretty big dump. I am seeing a dump. The overnight, the drop went from 56 to 18, so it's 30 points. Okay, so let me just screen share with you. What's going on, Mikey? OTM, what's going on? SWT shot 3. I have not looked at it. I had my back to the action. That's how I usually do the morning market updates. I don't want to look at stuff. I get too distracted, and I'm already distracted enough. All right, it's not a big deal. It's down. I'm looking for news to be a driver for it, and it does change the picture a little bit. One second.
0% versus the prior 0.1%, with the manufacturing output expected at 0.1% versus the prior 0.1%. Then the industrial production was previously actually revised to negative 0.1% on the previous. And the capacity utilization as expected is 77.3% versus the prior 75.8%.
Yeah, that's 9:15. We're getting a few releases this morning at 9:15. Manufacturing output, industrial production, like none of that would be 10 a.m. or the big reports today. I'm just looking around. There's nothing really. There doesn't always need to be a reason for the sell, but yeah, big dump. It's a big sell-off pre-market. The levels I had yesterday for for YouTube was
TRADEPRO head of the cash open. Daily sector open news now available in the headline feed and the research suites.
All right, so levels I was looking for here yesterday at the 34 to 36. It was actually 32 to 36. Held out pretty well on that long. That's what we're talking about on YouTube. In today's session, I had the level of 45 to 48. All right, and that one is, you could see, just broke right through. I don't know if this is news driven. We haven't found out yet, but it doesn't really matter because we're kind of selling off back down into structure. So if you kind of zoom in on this chart, I went to cyan because these are the option walls. So this is where you have the most amount of calls at the moment on the ES, where you have the most amount of puts. So these are the put and call walls. Call walls 6,800, 6,810, and the resistance was around 6,900. So naturally, those are the levels from the implied option moves based on open interest. So I'm looking at this, and big support 6,800. I mean, south of 6,800, this all breaks down. I think there's a lot of sell stops down there. I don't mind being long here. I think kind of be the last opportunity. So had this
commentary from UBS says for crude oil, they do expect prices to start recovering in Q2 26.
Oh, Mikey, what's going on, bro? That's so much better. That's so cool to see you, bro. I hope you're doing well. That's awesome. I wouldn't have never known. That put a smile on my face, as you can tell. All right, so I would have looked for some long side opportunity. Had this dump not happened, I would have said we're looking for pullbacks. Where to the 48? Well, we've long since violated 2 of my support levels. But I think there's one last shot. Wouldn't have assumed we get a chance to buy it near the low of the structure of the move today. I would try it, but anything south of like 6,810, 6,800, it gets ugly. And my style of trading these days is very different.
The base case is for Brent to trade at around $65 a barrel at mid-2026.
Yeah, I'm gonna just mute him for a second so I can finish my spiel. My style of trading is very different. I don't look for levels before the market opens. I look for real-time order flow. I just read the auction, and a lot of times there's an auction-defining moment that sets the tone of the day. And if you find that moment, it gives you a real-time anchor to a trade that's very low risk, high probability. That's what I do, and I do it using my little sauce that I have calculated on the footprint chart, and it just everything the way. Like, I can show you the chart. Let me show you the chart. Just didn't want to move it because then it's a pain in the butt to move it after. But yeah, so I've kind of put together some coloring, conditional coloring based on certain developments in the auction, and then I also see the markers for the liquidity moves up and down, and number of other things too. And this is sort of the way that I trade. And so order flow basically is my saving grace here in today's market session. Will we look to buy this long? I like it above 68.10. I don't know why we dropped so much. All right. But we still have an opportunity to get ourselves rebounding off this level. And we just shook out a whole bunch of long traders. Because what I was going to say leading up to this big dump is I would love to be long, but it just feels a little toppy. Like, we are getting lower highs and higher highs, but there's too many people that are long already, and we're at a resistance near the top. That's what I was getting ready to tell you guys, and then I turned around and I'm like, all right, it's not too long heavy anymore. Now we've reset the long opportunity. You guys know we go to and through resistances when people think that the trade is the riskiest. When longs are all in and everyone's bought and all the money's already put into the market, who's going to be the next dollar to push you through resistance to make this market bid? There isn't that next dollar. When everyone seems to be the most bullish, that means the money is spent. It's actually the most bearish because everyone who's already bought is a seller and they have no more money to buy any further purchases, therefore reducing the upside bid. So this is what happened. We shook out some of the longs. Dangerous to kind of stick your head out here and say, I don't want to buy it. Let's see how market develops in the next, 15, 20 minutes. Let's see how the open looks and holds. A lot of the time, I'll give you this as the hint. A lot of the time, no, bro, I don't. My chart book is not available for free on Discord. It took me thousands of hours and 20 years of trading plus to develop it. A lot of the times, the clue that you're gonna get is in the very first 5 minutes of the auction. In fact, I'll say this. I'll go on record saying this. The first 1 minute, a lot of the order flow that triggers my filters, my setup, ends up being very indicative of the direction it goes for the day. And sometimes it's surprising. Sometimes you get a lot of buying. Sometimes you get a lot of selling. Doesn't correlate and match the day. And the only explanation to that is you're not really seeing what you think you want to see. You're seeing what the market is telling you. So many times as traders, we focus on finding a level beforehand. And we have this psychotic tendency to say, when it gets to this level, I'm going to do this. But the reality is that's an old level. if it's based on old trades, it's an old level. Let's look at the real trades, the real-time auction. And I think because it's so hard to make real-time decisions, people say, I'm not good at making real-time decisions. Instead of learning how to make real-time decisions better, you revert to looking to make decisions based on old information. Because it's slower, it's easier, it doesn't put you under pressure. But the real time is where it's at. And the first 1 minute of the open usually is a big reveal for the whole day. So that's what I'm going to do. I'm going to wait for the big reveal for the whole day. I do have levels I'm kind of looking at, but 6810 to 6800 is sort of where I would expect things to hold out at on the sports side. And if we do break that, selling accelerates. There's a lot of sell stops on the way down. Where can we find our way to? It gets pretty ugly below 6,800. But just remember this. I'll end the stream on this note because we have a trading plan. We have everything. We have our levels. 6,800 to 6,810 as a really big call and put wall built into it. It's not massive, but it's big. The biggest one's down below, like around 6760, but 6,800's got a put wall, which means that dealers are short gamma, which means that dealers are going to probably need to start buying a little bit around that level. So it might be temporary support. So watch 6,800. I think 6,800 to the 10 is the whole day today. And again, 10 a.m., top of the hour, a lot of news. I don't think this day is going to be easy to trade, and I don't know what this volatility was all about. But it doesn't matter what the news report is. Today's going to be a bit of a tougher day. Get ready for a higher volatility trading day. It's not going to be one of those sleepy upside days. All right, let me look at some of the comments. Marco, awesome, brother. Taking a day off is never a bad idea. Looks like probably a good day to take off. All right, Michael. See you in the room, brother. I'll see you guys there. Let's end the stream. Let's head on over to the room and make the best of this opportunity. I'm sure we're gonna have a good day. Yesterday we had 80% of our live positive traders be green, or 70 something, mid 70s. I think today, even though there's volatility pre-open, I think things settle down and we pick up the pieces when the dust settles, and that's what I love to do. Take care, guys. Love you all. Have a great rest of your day, and I will see you tomorrow at 9 a.m. We'll do this again, and we'll see how things go. 10 a.m. Remember this, top of the hour, 10 a.m. news coming. Be prepared. See you inside the room. Take care. Goodbye.